After nearly 10 years of delays, controversies, and regulatory scrutiny, India's largest stock exchange is finally heading to the market. The National Stock Exchange, or NSE, has filed its draft red herring prospectus with SEBI, setting the stage for what could become one of India's biggest ever IPOs. But this isn't just another listing. Investors aren't buying a manufacturing company, a bank, or a technology firm. They're buying a stake in the infrastructure that powers India's financial markets. So why is this IPO such a big deal? The issue is expected to be worth around 30,000 crore rupees, potentially surpassing Hyundai Motor India's nearly 28,000 crore rupee IPO in 2024. The interesting part is that NSE first tried to go public almost a decade ago. The exchange first filed for an IPO in December 2016, but the plan was derailed by the co-location controversy and years of regulatory scrutiny. Now, after a long wait, the exchange is finally ready for its market debut. So what exactly are investors buying? At its core, NSE benefits whenever investors trade, and Indians are trading more than ever before. NSE today sits at the center of India's capital markets ecosystem. According to the World Federations of Exchanges, NSE remained the world's largest derivatives exchange in FY26. It is not just India's biggest exchange, it is one of the most important trading platforms in the world. And that's what makes this IPO different. Every time investors trade, NSE earns. As trading activity has grown, so has the exchange's business. Financially, NSE remains one of the most profitable institutions in India's capital markets ecosystem. Revenue from operations rose to 16,601 crore rupees in FY26, while net profit stood at 10,302 crore rupees. Now let's talk about the structure of the issue. The IPO is entirely an offer for sale, or OFS. That means existing shareholders will sell part of their holdings while NSE itself will not receive any fresh capital from the issue. Around 14.89 crore shares, representing nearly 6% of NSE's paid-up capital, are being offered for sale. The shares will be listed on the BSE. But no business is without risks, and market analysts are watching a few closely. A significant portion of NSE's revenue comes from derivative trading that makes the exchange vulnerable to regulatory changes. In fact, profit after tax declined from 12,188 crore rupees in FY25 to 10,302 crore rupees in FY26, partly reflecting the impact of SEBI's tighter derivatives rules. The DRHP also highlights cybersecurity threats, technology failures, and regulatory proceedings as key risks. Investors may remember the February 2021 outage that halted trading for more than 5 hours. So this IPO is about much more than a stock exchange listing. It is the culmination of nearly decades-long journey to the public markets, and it gives investors an opportunity to own a stake in the institution at the center of India's financial system. Follow Business Standard for more such stories.